Hey bros, what's going on? This is Cut My Butt. Be sure to subscribe to my channel if you haven't already, because subscribing makes you feel good.
Hey, what's up, YouTube? What's up? I hope you guys have been keeping well, keeping healthy, and I hope the trading has been going well. So, for this video, we are just going to be talking about the ICT 2022 model. Okay, so I'm just going to be explaining to you guys how I understand it and how I would apply it. All right, and I do use this model. All right, it's consistent. It's actually one of my favorite models to use because it gives you a set of rules to follow and it sort of keeps you in your lane. Okay, so if you were to take a loss using this model, all right, it's quite easy to get you back on track. You can just simply go back to the rules and ask yourself if you followed them or if you bent the rules slight a bit, which is why you took the loss at that moment in time. Okay, but nevertheless, let's get straight to the chart. So we're just going to be reviewing last week's trading day, which was on Thursday, okay, and how the model applied. Like I said, this is how I interpret it, how I understand it. But if you'd like to check it out yourself, be sure to head over to ICT's YouTube channel. You will find it there and check it out. Be sure to back test it, okay, if you're not sure about it. But if this model plays out again this week, all right, I'll make a video on that. But for this video, it's obviously going to be hindsight, okay? But if I do see it happening within the week beforehand, I'll do my best to record a before video and my thought process behind that. And then after that, I'll record the result and come back and show you guys. All right, but nevertheless, let's head to the chart. Okay, so looking at this trading day here, we're just going to mark out midnight, okay, because that's the start of the trading day. All right, so that's midnight right here, and we're going to mark out 8:30 because that's the equities open. So because we're using indices, all right, we'll be framing our timing around 8:30. All right, so first thing first, you want to look for your liquidity pools. All right, so the first thing that you want to do is identify old highs prior 8:30. All right, so if this is 8:30, we want to look for old highs to get rated before we look for our trades. Okay, so if you look slightly to the left, you can see that we do have highs right here. But if we look at the bigger picture, okay, let's just head down to the 4 hour so that you guys can get the bigger picture. Okay, so let's just get this right here. Okay, I'm just going to remove the dividers quickly just so you guys can see. All right, so we're looking at this trading day right here. Okay, so if we look slightly to the left, you can see that we do have clean highs here which we can use as liquidity pools. Okay, so you could use this high here. Okay, and you can see we have one more here. All right, so these highs are clean, so above that there will be liquidity. All right, so if we were to mark that out, so if we were to do that, right, you can see it's clean highs. Okay, although we did pierce through that, but that wasn't enough. All right, because once price traded lower, okay, price just closed in this fair value gap and traded higher. Okay, so when I'm looking for a rate of liquidity, I want to see price trading above that, through that, and above that. Okay, and if you look slightly to the left, you can see that we did close in on a fair value gap here. But if you do look closer, what's this last up close candle here? Okay, So if we mark out the body of that candle here and you look to the left, you can see price hit that on the higher time frame. Okay, so price hit that order block. Lovely, right? So that was great to see, and we had a reaction there. Okay, so once you have that in mind, we can then head down to the 15-minute and wait for the rules that applies to the model. Okay, so this is just something extra to add using the higher time frame as your confirmation. Okay, because once price trades off a higher time frame, a PD array, you want to take note of that because your trade would possibly be a high probability trade. Okay, so let's just mark out this order block with another color so that we don't get confused when dropping down to the lower time frame. Okay, so we have that blue color there, and we do have these equal highs here. So let's mark this out. It's buy side liquidity right there. Okay, so let's go back to the 15-minute and start seeing things play out. So you can see we do have price hitting that order block right there. Okay, let me just drag this to the left so that we know what level that is. So this is the equal highs that we have. Okay, let's just do this. All right, so now we can mark out our 830, right? Because that is the equities open. All right, so the midnight open can apply to indices as well, but it's mostly used for forex. All right, so because we're working with indices, we're going to be using 830. Right, so if we use 830, we can see we'll be waiting for highs to get rated prior 830. So we had that. All right, this here, and we have price hitting at order block right here. Okay, so we do have a raid here. So once we get that, we want to be heading down to the lower time frame and see what evidence we have on that. Okay, so once we hit that level there, you want to wait for the rules to apply. So the first thing is you want to wait for highs to get rated prior 830. Okay, once that happens, you want to wait for price to create a market shift on the 5, 4, 3, or 2 minute, or even 1 minute time frame. Okay, so whichever market shift you get, stay on that on the time frame. Okay, don't look for a market shift on the 5 minute and then enter on the 1 minute. All right, you want to keep your entry time frames consistent. Right, so for if we're using this example, we did get a market shift on the 5 minute, so you want to enter on the 5 minute. Okay, so just keep that in mind. Just gonna drag this to the left. Right, so if we take a look at where price rated the high, okay, if we look closer, we can see we do have equal highs here also on the 5 minute. Okay, so that's also lovely to see within a higher time frame, a PD array. Okay, because that also gives you more confirmation. Okay, so we did get a raid on the 5 minute. All right, so let me just get this out the way. Okay, so we had a raid on the 5 minute as well. Okay, and did we get a market shift? Yes, we did. You can see we took out a low there. Right, we had a shift. Oh, let me actually do this. Let's make this red. Yeah, okay. Right, so we did get a shift, okay, and you want to be using a fair value gap within a premium, okay. So if you were to take this high to that low, okay, you want to wait for price to retrade to trade within a premium market, all right. So we want to take we want to use that right there, okay, and let's just apply the premium versus discount, okay. So we can see price trades into a premium, okay, and if you look closer, we do have a fair value gap, all right. That candle's low, the wick, and that candle's high right there. Let me just change the color so we can see we do have a fair value gap right there. Now, regarding your take profit levels, okay, you can use old lows as sell side liquidity. Okay, so you can see we do have one here, okay, that is your intraday low, okay, because that low it happened prior the run, okay. So we can use that. Let's just mark this out as side liquidity. Why is this thing capital letters? Here we go. Okay, so you do have sell side liquidity there, okay. You can use your intraday lows for your targets, or you can use the previous day's low or the previous day's sell side liquidity, okay. So since this is Thursday, let's just mark out the previous day, which is Wednesday, the entire range, okay. So let's just mark out midnight here, okay. So that's Thursday, and Wednesday, let's get Wednesday midnight right here. Right, so this entire range is Wednesday's trading, okay. So if we were to use the previous day's low, it would be this right here. So you can either use intraday lows for your target, or you can use a previous day's low as your target, okay. And as you can see, price played out lovely. So obviously regarding your stops, okay, if you were to take a look at this price action real close, okay, we do have this last up close candle which you can use as a order block or entry point, but because we have this fair value gap, right, that would act as a resistance, okay. So in some cases, if you do get this, price wouldn't have to trade higher. So regarding for a safe place to put your stop, okay, you can use, so that would be your entry there, okay. What I like to do is I like to use the high which got raided on the lower time frame, okay. So this equal highs was on the 5 minute, okay. So I like to use that as a stop placement, okay. If your risk appetite is, if you're satisfied with your risk appetite, you can put it above the high, all right. But just because the risk to reward looks sweet and not so wide regarding the stop, I like to use that, okay. And when price hits your intraday liquidity, okay, you can close some profits, or you can break even, or use that as a take profit level. Or if you target the previous day's low, all right, that would be your take profit, all right. And then once that happens, you can then either close your trade, or you can just move your stop to break even and just track your trade, okay. So I hope this gives you guys a great insight to understanding the 2022 YouTube model, okay. It's great. Be sure to test it out. this week. All right, make sure that the times are correct. All right, regarding the trading times, make sure your trading view is on New York. Okay, so if you go here to the trading view at the bottom right corner, make sure it's on New York, and then wait for 8:30. That's the open. All right here we have the open, and if you're familiar with ICT's opening price, all right, we can see that we are above opening. So that's also another hint that your trade would be high probability. All right. So if you looking for shorts, you want to be entering close or above the opening price. And if you're looking for longs, you want to be entering below the opening price or closer to that. So I hope you guys found this video insightful, good, fruitful. And like I said, if this model plays out within this week, I'll be sure to make a video on it. But yeah, I'll see you guys on the next video. Have a great trading week. Be safe, and until the next video, I'll talk to you again, Lord willing. Cheers.